Good evening, this is Ken Long from Tortoise Capital with a chat room debrief for September 15th, 2014. We're going to take a look at a couple of trades from today and then take a look at some swing trade frames for tomorrow's trade. Okay, so the first one we're going to look at is an SQC sideways quiet channel. I characterize this one from September 15th. This is in VXX, the volatility ETF. This is daily charts. This is part of the swing trading one day at a time technique. And so what we have in VXX was this large sell-off from 35 down to 27-ish. And I look at this as a sideways quiet channel here. We've got all prices in the river. Both regression lines have been in the river. And now we get a breakout. So we framed this trade on the weekend report, said if we got above 2880, this green line, this little tip right here, we would be entering. That was like a double top, you can see here and here. And so we got the entry at 2880. We used our typical 30-cent stop intraday for management. We got a nice move in our direction. The market was showing weakness. We added a second position at 2910, the second green line in the middle of this big white candle. Again, the 30-cent stop. It went as high as 2965 during the day and then sold back off, and we took our exit cleanly at 2940 for a 3-hour gain. We're going to be prepared to play continuation pattern on this one. You can see the trade frame that we have here shows the purple lines as targets, and we have one right around what has been the Bollinger Band mean, one at the far side of the river, one at the far side of the floodplain. Each one of those is within range in the next 10 days or sooner, based on how volatile this rascal can be. And so we would be ready to play a continuation pattern on price taking out 2970 as a new daily high, taking out today's high. We would be automatically ready to enter that. There may be some ways that intraday we can get an improvement using the RLCO framework, but at a minimum tomorrow, with some of today's market's money funding the idea, we would be ready to re-enter at 2970. The second one we'll look at is this is Cliff Natural Resources, one of our favorite trading vehicles. This is a very trendy symbol. You can see that it sold off from 1850 down to 1350. That's like 20 to 25% sell-off. That's not unusual in Cliff. You can see that the 270 regression line has been straight down, although the 90 has diverted. Is actually showing some willingness to put in a bottom here. And so we saw 5 days of failure to fail further. We had an RLCO outside of the river in that blue circle. You can see the 10 crossing the 30. And so our actual trade was an intraday trade where we were able to get in at 14 1/4 with our usual 30-cent stop. And that's this orange block. Right here is the initial risk, and then we got some nice moves. We took our second entry intraday at 1485, which would be up near the top of the candle, hit an intraday high and it started selling back off, so we exited it, everything at 1495 for 3R, and we will be prepared to play continuation on this, looking at potential price targets tomorrow, about 1550, which is the 90 regression line, about 16 even, which is the Bollinger Band mean, 17 1/4, which is the far side of the river. All of those are within range in the next 2 to 3 days. And after this nice sell-off, a reversion to mean is not out of the ordinary, so we'd be willing to trade this one. Now I would just show you another like a Z pattern trade. If we wanted to use the formal RLCO swing trade pattern, pattern number 1 on this, then we would be wanting to enter this on a swing trade not later than price re-entering the river, which would be about a 1450, and then we could use either a swing low down here about 1350 below the swing low of the sell-off, or we could use a full Z, which would be the far side of the floodplain at about probably 1315. So if we were to use the full Z, that would be about $1.25. That would be this yellow block, and then our 2R potential on the upside would be 1R to the Bollinger Band mean, 2R to the far side of the river, and that's the 2-to-1 justification to be 3R in that trade frame to the far side of the floodplain, which would be an extraordinary move. That would be as good a move up as this was as good a move down. And so, as you can see, there are some things that you can do with trade engineering intraday, and some choices that you have about where to place your initial stop. I would just also note the two parabolic stop and reverse dots on the bottom, which often coincides with that RLCO pattern, which tells us we have to be thinking about stalking the long side once that long PSAR gets breached, and when the dragon gets breached, that's that 10-period Bollinger Band. This shows the pink. When that gets violated, then we've got to be thinking about the reversion to the mean trade. So that worked out pretty well, and that's two trades from today that gave us some money to be able to play tomorrow. So the next thing I want to look at is some trade ideas from the daily report for September 15th. Just hitting some of the highlights. We'll take a look at let's see. I think we wanted to look at, we're going to look at Travelers. This is going to be a 5DD continuation. Now, there's no signals today, but yesterday it was a 5-day down and then hit the entry, and today you see the green highlight means it was a percentage winner today. It was the second best performer in the Dow at returning 1.22%, and so that 5DD pattern worked well, and so we'd be looking to play a continuation. There are others to choose from up here. You can notice the auto framer has some reward to risk ratios that are above 4, like Caterpillar and Walmart, certainly possible. You have a handful of channeling and overreaction. You got a 5DD in Caterpillar. You have 551W. So there's a lot of opportunities in the Dow, but I just want to take a look at Travelers because we've been working that one and have some money in hand already. And then in the ETF tactical, see there's very many channeling and overreactions, 4 good 5-day downs, 3 551Ws. All of the auto framers are firing. You've got, we're going to take a look at Brazil, for instance, which was a % winner today, but it's still #1 max pain range compression and has an auto framer reward to risk of 6.8 to 1. There's a handful of good frog candidates too for daily trading intraday, and then the RSI2, all these that are highlighted green are a score of 10 or less, and that's a tip for us, or a technique that says those may be postured for a nice turnaround. So we're going to take a look at EWZ just as an example of some trade framing. All right, so let's get back to the charts. Okay, so the first one is CLIF, CLF, and this is an RLFF strategy, a regression line fractal framework. And so just, you may not recognize this trade framing, so let me just describe it one time. I've turned off the candles and just turned on the price to show as a 2-period Bollinger Band, plus or minus 1, and that gives the effect of a price ribbon with a nice little 3-dimensional quality to it. What I like about this, even though I've been using candlesticks for 25 years, I kind of like this ribbon because it reminds me that price is a continuous function in many ways, and the lack of colors actually helps me see the price flow a little better. So I've been experimenting with this. So one of the things that we like to do is, in the regression line fractal framework, is find the difference between the long-term fair value, which we treat as the RL270, that's this pink line, or purple, I guess, and the price proxy, which is the 10-period regression line, which is this blue. And so there was a moment here back on June 16th when there was a maximum excursion of price away from that regression line. And then one of the things that we play for is we count the number of ATRs that is away and then use that as a RLFF reward to risk ratio. And so when the RLCO occurs down here, it wouldn't surprise us to see price get up to 1950. In this case, what it did was cross the 90-period regression line, which is the green line, gave us another little RLCO here, and a pullback. This was another maximum excursion from the 270, only now it's a little bit less. So there was a tradable moment in here from 14 to 16 and a half, which is like something like 20%. Just inside this move. And so now we get a low and then a series of higher lows. This RLCO now becomes interesting, and so we would play from here, aiming at 18, and it turns out that that's the move that occurs. Price gets through the RL270, which is back to fair value, gets up to the previous RL270, gets into this gray area and halts. This gray area is actually a 30-period Bollinger Band on the regression line, plus or minus 1. So we're treating that sort of as like a neutral zone or a buffer zone that once it crosses, it really has to get out of this gray area for this to confirm that what we have is a rebound. In this case, magically enough, it gets right to the far side and then reverses. What this line here is showing is that we had a maximum excursion from the 270 on the downside, from the 10 to the 270. So if this move fails, what we do is we plot that now as the price target on the downside at 1650 from 18 and a quarter. When that price level gets violated, that's a place where we can think of the far side of that buffer zone has been rejected and we can get short. When it leaves that buffer zone and then violates the 270 again, we can get a second short in here, and we'd be looking to cover down here in this orange region, which was the previous support level, and that gives us a nice way to play short from 1650 down to 1375. And at this level, we're not surprised when it finds support. That's what it did last time. We get an RLCO inside here. This was a nice one-day trade that we just saw for 3R, but on a swing trade basis using this fractal framework, what we would do is we now say RLCO below the river or below the 270 regression line at a support level, and now we would look at price already got to the 270. Here's a price target at 1550 for the 90-period regression line, the far side of the buffer where we'd expect it to hesitate or fail like where it did last time at 16 and a quarter. We would then take a look at this price level here, where we have a bunch of support and resistance at 17 and a quarter. The last place that the RL10 made a peak, and over in here there's a cluster, so we'd see about 18, and then going back to the original up frame at 1950. If you still had money in the market from the original one-day trade, like if you kept a piece, you could have had your initial stop down here, but I would be looking at a stop now below the 270. So the idea being that if this move is going to work up this trail of tears here, the wall of worry going up the price ladder, then it really shouldn't violate below the RL270. It should have another move at least of this magnitude, which would get us up into here. So failure to do that would be evidence of a continuing fail, and so would be willing to short here on a violation of the RL270. So that's Cliff. That's in a critical state with one-day momentum in hand. This is Travelers. This was the same trade framework here, RLFF. Just want you to notice the move from the RLCO to the RLCO to the RLCO from here down and then back up to the previous level. Two very tradable moments. You can see price with respect to that 270 regression line. It barely flinched in this sell-off and rebound. Notice the slope of that 270 barely flinched. We've got price still at the long-term fair value, and so if you take the upward slope as a positive thing, which I do, we could now, and we have the 5-day down and then a 1 day of momentum. So we've got money in hand. This should act as a stop here below the gray area of that price ribbon. And then we'd be looking at a price return to about 95 even, and then to the swing high at 96. If it gets above 96, this is free and clear and off it goes. On the other hand, this is in a nice critical state for us, so if it fails here, the next target on the downside is the retest of this low at 88. So what we have here is a nice way to play the continuation of the longer term momentum after this aberration, which was quickly corrected, a measured pullback, and then a resumption with the 5DD continuation. And yet, if that fails, we can frame a nice trade aiming for 80, looks like 88.60-ish, with the stop probably just on the north side of the RL270. So we have a critical state here in Travelers, which makes it interesting. This is just want to show you a technique that we're working on, this regression line fractal framework. This is in Goldman Sachs. From today's report, Goldman was at #1 in the Dow as far as the number of ATRs above its 270 regression line. So right now it's 5.5 ATRs above its 270 regression line, which we take to be long-term fair value. I want you to notice how the fair value of this bottomed out and is now starting to climb again. The 270 is on the north side of its little buffer zone. When the slope was downward, that tells you that the price pressure was down, and then the crossover occurs in here, and now you are entitled to have an upward bias around 166, and now we're up at 183. So there's a 10% move that's indicated here. The distance below the 270 from down here is the distance that it's now above the 270. So there's a moment of significant ATRs below the 270, a reversion almost to the mean, if you will. This second test with the higher low finding support at the RL90 gives you a nice way to get in to this long-term continuous play. And so right now this is the best relative ratio in the Dow in terms of numbers of ATR above its fair value, and so that coincides with a resurgent strength in the financial sector spider that we saw this weekend. And so Goldman Sachs, I'm ready to get into that upon taking out yesterday's high, just as a continuation of the momentum play, and you might use this as your initial stop, for like $3 or $4. So those are just some ideas on some pattern trades that come out of different types that come out of the daily report. There's a ton of good swing trades that were indicated. You see them on the auto framer already. Let me shift back to that real quick. The auto framer will give you all sorts of trade frames and where the mechanical entries and the stops and what the profit targets are on the upside, and then a reward to risk ratios. These are all better than 2 to 1, and these are just from indexes 1 and 2, which is the Dow 30 and the ETF 30. So that's everything I wanted to talk about today. This is Ken Long from Tortoise Capital. Keep your risk measured and your powder dry.